Welcome to the Core 4 Show. I'm Coach Brandon Adams. I'm here to give you guys another week of our journey. And what's amazing about our journey is that it's not unique to just us. We all have a journey that we're on, and our goal is to try to find financial freedom. Our goal is to try to find some monicum of success that kind of goes outside of our normal channels, which would be a 9 to 5 or exchanging our time for money. And we could all go into, how we've been raised in the educational school system to look at time dollar as the training module that we're going to use for the rest of our life, where we go work for somebody else and then we get a paycheck every 2 weeks or whatever it would look like. And then from there, we retire, we get our gold watch, and then we, go off into the sunset. The 401ks changed from the original pensions. And so we had to go through that and we had to listen to those narratives. And so what Core 4's design is to really help us to understand that there's a mindset that we have to actually have in order to be successful. And then secondary to that mindset that we need to have, we need to understand that the 9 to 5, is a thing, but how do we kind of either reduce the hours that we're working so that we can enjoy the quality of our lives? And then number 3 is investments. What kind of way can we actively or passively invest? And then from those active and passive investments, start to almost act like we have an employee of sorts that's working for us, that's helping us to create money while we sleep or while we're working our 9 to 5. So all of these things are important to lead to finally our retirement. And so somebody said to me today, they were like, Coach, you're distracted. You're doing basketball, you're doing this alternative finance, all the rest of the stuff. And, we're not in a world where we can just be one dimensional. We have to be dynamic, whether we're on the basketball court, if we want to be successful, whether we're in the boardroom of something, whether we're, working with kids. Like I have to be dynamic working with the students and make sure that I'm relevant to be able to make sure I can coach them. Number 1, teaching them X's and O's, train them. Number 2, teaching them the skill development. And then number 3, helping them to understand how to socially be aware so that they could be recruitable one day. They're likable. So that's a dynamic process. And so to sit over there and think that whatever job you're on or whatever you're doing, that you can just isolate yourself and just do one thing, unless you're really making a significant amount of money or you've been lucky enough to become a CEO of some kind, really we need to have some other breakthroughs. And so that's what I'm here to do, is to share my story, my journey. And we have our Core 4 family. We're all a family here, and we would love for you to be a part of it. And the way that works is we have James Bishop, we have Chris Pulver, we have India Bradford, we have Sonia Bird, and so many more that are each week looking for ways to help explain our journey a little bit better, help prepare me a little bit better to explain the journey, and then obviously help you to make quality decisions. And understand that, most of the time when you're dealing with these scams out here, there's an affiliate program and all the rest of the stuff to share with people. What we really want is you to have discounts. So I'd rather you get a discount on any of the stuff that we're, involved with, or some white glove service or something else, than to sit over there and feel like the money that you're investing is now, something that I'll be able to benefit from. That's not the priority here with Core 4. So we offer insurance, and so James is a master of insurance, and his goals are really to educate you on how you can even use insurance as an income stream. And that's powerful because we've always looked at it as a death benefit. So without further ado, our goal is to bring on the most talented, and we have our core forecast, and this is coming up. So let's bring on Chris. And Chris, how you doing, sir?
I'm doing well, Brandon. Happy Sunday. Hey, Core 4 fam. How are you?
They're saying, "Hey, buddy, we're doing great. We're
Yeah,
doing."
we're doing great.
Okay, what do you think about what happened with Biden today?
I mean, I think it should have happened after the debate. I mean, it was pretty apparent that, the debate, several weeks ago, plus the, assassination attempt, it's like the probability of a Trump presidency went up to 70+%. So this might seem like a a Hail Mary. I don't know if the Democrats still have a chance. Yes, no, maybe. I think there's people still in the middle that might be on the fence. Just depends on who the front runner is. If it's Kamala Harris, okay, fine. If it's somebody else, I know James thinks Newsom, is it Gavin Newsom, right?
Yeah, Gavin
Yeah,
Newsom from California. He could be a potential front runner. I mean, he's a great orator. He can get people behind him, but I mean, his record in California isn't the greatest. You know
right.
what's going on with that state, so that's an easy, way to attack him from the right to the left. But
Yeah.
it's just a mad world we're living in. What in eight
It's been,
days?
I was going to say the last 2 weeks have been pretty nuts. And on top of that, what's going to be interesting is, think of George W. Bush and think of Trump when he beat Clinton. Neither one of those were popular votes. They were electoral college.
Yeah.
So however this shakes out in November, I mean, we could have the same situation where there could be a popular vote winner that's not our president, and who knows? Or this could be a landslide. Who knows? I just thought the last couple of weeks have been interesting with everything we're talking about to what the markets did. There's a lot of stuff to unpack here, so that's what I'm ready to dive into.
Yeah, well, I'm gonna let you dive in. I just wanted James to be on
Of
here,
course.
like the three of us talking about this. The hardest thing in the world for me to imagine is why it took so long, right? This was a personal vendetta, it seemed, between Biden versus Trump for him to wait this long to do it. The debate was awful, it was a disaster. And
Yeah.
so now, whoever it is that becomes a nominee, they haven't been able to prepare, the way that they normally would. So I just find that to be interesting. You're right, the assassin.
Well, I mean, to that point, I mean, look, if somebody comes in, talks well, enunciates well, talks about factual things, that's going to mean something to actual common sense voters. I mean, even in the first debate, the only thing that people had to go on was, Trump looked good, sounded good, but he lied about everything.
Yeah.
So I mean, it's like if we just have some common sense out there, and somebody comes in and actually, has a college education, professional, discussion, I feel like Trump's not there. I mean, it's just it's so aggravating
It's
to
so
be in this situation. And look, I'm not joking when I say I would consider leaving the country for the next 2 to 4 years.
yeah.
I mean, there are. I mean, I don't know where, but I think Japan
Well,
would be nice. I think Germany would be great. I wouldn't mind checking out Canada. It's like I don't care, but I think I was talking to my brother about this today. Just the overall like country's direction, the country's infrastructure. It's like all these things are never getting like bipartisan support. And here's one thing that happened last week. Okay, I thought, going into Monday, that okay, look, the market has had a lot to digest. Well, it looks like Trump's going to be the probability president, right? 70+% now. The markets are pretty clear that the Fed is going to be cutting rates September, possibly December, maybe even September, November, December. So I thought, what a good week for the market to have some clarity and see where we can kind of continue to run and melt up through the rest of the year. But
yeah.
instead, the comments that came out Wednesday had something to do with US making Taiwan defend itself, China semiconductors, and I'm like, okay. So rather than Trump just being quiet for a second, enjoying and kind of basking the momentum that he has built over doing nothing, all of a sudden it's like this is the geopolitical risk that we have had bubbling under the surface, and it's right there in front of our face. And if you're going to be, staring down semiconductors and trying to squash them down, or there's beef between the U.S. and China, and optically and adversarially it gets worse and worse. That's a direct play on Nvidia. That's a direct play against semiconductors. That's a direct play against Taiwan. That's a harsh position that's carried us, so far this year. I mean, so much of the market's volume, so much of the market's gains have been in 7 stocks, in 10 stocks, in 4 stocks.
Yeah.
So the one thing that was interesting the last 2 weeks, is just watching the very aggressive rotation out of large cap tech and very quickly into a brief broader market. So there have been, over the let's say 7,000 publicly traded companies, we've had about 70+% of stocks now jump above their 50 moving average, and 70+% staying above their 200 moving average. So it was, red in Nvidia, red in Tesla, red in Google, red in Meta, red in Netflix. All these stocks were down, and everything else was kind of up. And the Russell was the best performance we've seen in like 30 years as far as a week to week and a week basis gap, where the Russell outperformance compared to the S&P was, I think, one of the biggest in history. So there was an aggressive rotation, but if you were to see where prices closed on Friday, the Dow gave most of it back for the week. The Russell gave, I think it was up 13%, gave back about 5% of that. So I'm hoping we at least have some basing going on, and it's a good looking play technically. But it's an earnings season. Right now there's a bit of a calm where it's going to be about earnings. Forecasts are pretty frothy, but when we go into earnings season, companies are going to have pretty solid results and forward guidance that's optimistic to keep this rally going. And this is a good opportunity for companies to show that, look, we are making more money. We've taken necessary actions to make better money and have better margins. And if they can do that and sustain this and get through this earnings season, look, the Fed's probably going to cut in September. It helps consumers. Small caps could possibly be one of the better catch-up trades of the year. We could probably see like a sideways NASDAQ and a sideways S&P, but still have the Russell catching up in a big way to get double digits. We could have a big boost in the price-weighted markets with equal weight for S&P, equal weight for NASDAQ, and a price-weighted Dow. All those instruments could still catch up. And then the election drama unfolds, however it's going to be, I don't know. I said earlier this year, it's like, this is the last thing I want to think about, but it's at that point now where it's going to be front and center every single day. So we can't avoid it. It's coming whether we like it or not. And, there's a lot to navigate, but
so go back to the sideways stuff that you're talking about. I mean, sideways is good for true investors because they're buying low and selling high. If that's kind of the direction, isn't that right?
Yeah, but I mean, sideways is going to make people really nervous and really antsy because it's going to feel a little toppy. We're sitting here at all-time highs. If we go sideways at all-time highs, it's hard to justify that doesn't just turn over.
Oh, yeah.
Right.
Okay.
So, I mean, if you go sideways, it's on the cusp. And I mean, again, very smart people are talking about the reality of a recession. James, you and I have talked about this a lot. I mean, we're hitting that 2-year window of an inverted yield curve. We've seen job numbers go up 0.5 and 0.7% over a running 12-month period. That typically is recessions. I'm watching put and call ratios. I'm looking at also the percentages. It's kind of a sentiment play with the inverse ETFs. If we have inverse ETFs go to these like really low, kind of all-time low levels, that typically means we have tops in the market. So we're not there yet. But these things are, again, on my radar, simply because these are things that I don't want to be biased. I mean, I'm like last week, for example, I had, I want to say like 3% just in the Russell alone in profits. And I booked some. I'm still running for the rest of the year. I'm running into Q1 for the Russell to play catch up and give me some time. Bitcoin's made a nice little run from those 56K mark back to 65, 66. So, I mean, my Bitcoin exposure, my small caps exposure, the Dow's been performing well. So, like, I'm not just all SPY, all Qs. In fact, I'm probably ready for this rotation, probably very well positioned for it. In addition to that, I'm extremely well hedged for anywhere between a 10 to 12 to 15% drawdown. If we see one in the markets, that's going to end up making me close to, I want to say, probably 15% in my portfolio. So I might deal with some drawdowns, but my hedges are constructed in such a way that it should be minimum damage to my portfolio. Where James and I know this. The last couple of weeks, it's like we had 6 all-time highs. And I was hitting watermark highs. We had a pullback of 5% in the NASDAQ and 3% in the SP. I was hitting all-time highs. So the portfolio is doing pretty well for Streamwise. And I think the only thing that's lagging right now is China. And so I did take some assignments last week. I'm going to do a quick repair for maybe 1 to 2 weeks. But I don't want to have a bunch of exposure. I'm going to stick to options and try to just get some ridiculously good prices on like 4 stocks that are China related. But I still think the optics of that, it's like, as much as we want to make it seem like we can't get along with China and we want to be on this, this whole nother level without them, we need them and they need us. And I will defend that pretty adamantly, just because they're the manufacturer. They do it with cheap labor costs. They do it with good margins. We have so much exposure with multinationals and we're the consumer, so I don't think you can have one without the other. But obviously we can also have a Taiwan invasion, and who the heck knows what that looks like.
I will say this, Chris. If you look, though, many major manufacturing companies have, due to COVID and even prior to COVID, removed themselves from China. In Apple, for instance, 50% of their production comes from India now.
Sure.
And but it's
not in the U.S. But it's not in the U.S.
Not in the U.S.
That's my point. That's really my point. Is like, we're not bringing shit back to the U.S. I'm sorry. We're not going to be the country all of a sudden manufactures our own stuff. It's like
only company that will be only people that will be manufacturing in the U.S. is China. Foxconn and Taiwan Semiconductor will be the largest manufacturers in the United States. So China is the largest U.S. manufacturing company.
Yeah, exactly. Yep.
All right, Chris, we're going to jump off and let you do your thing, and we'll see you in 2 minutes.
Okay, sounds good. All right, so what you're looking at here, the shaded red is the last week's price action for the S&P. This is the SPX. Like I said, from top to bottom, we had about a 3% drop. So go to the top, go to the bottom, and we sold off about 3.07%. You go to the Qs or the NASDAQ. This has had 2 down weeks with the tune of about 6%. I think 5.86 from peak to trough for right now. So high to low. Around 5.88%. So we've had a pretty strong sell-off. Now, just take a moment here. Look at camera 1, red on the week. Camera 2, red for the last 2 weeks. The Dow for the last 2 weeks has had 2 stellar weeks, right? So Dow playing catch up. Now, last week was essentially flat because we were up all week in a big way and we gave it all back in 2 days. Thursday, Friday was a pretty ugly day for stocks overall. You know, the Russell had pulled back aggressively, the Dow pulled back aggressively. But when you look at something like this, if we're coming out of this breakout point and we're going up with a pullback, if we can base in here, there's still a good opportunity to kind of call this a higher low and see if the Dow or the DIA can continue to run. I want to say the DIA is still in single-digit performance for the year, where the Russell is caught up in a big way, probably around like 8 to 9% for the year. What was once, 13, 14%, very quickly, briefly, has been pulled back to single digits. But again, I think a meaningful correction is still upon us. I post this on my Twitter. I post this on my Discord. I post this in a YouTube video. I discovered that last week for the first time in a while, TradingView was allowing me to go back and publish videos. So if anybody's out there, on TradingView charts or following him on Twitter, I have a handle at Chris Pulver. And I post stuff all the time, my Discord channel, my YouTube channel, all that stuff. All I'm saying is I posted a very simple video on where I think the pullback can likely go. I'm looking something to the effect of, if we are going to see a pullback, the S&P is probably going to be in a 7 to 12% pullback window. The Qs would be somewhere around the 10 to 15% window. From there, I'm still interested in buying dips. From there, I'm looking for the rotation back into small caps to see if they'll outperform over maybe the next 5 months. And the Dow, usually underperforms, but usually has more manageable drawdowns. The VIX, I'm also hedged on the VIX. I'm long at 1050 on the VIX. So 10.50, we're up to 1650. I'm up $6 in that call option. I still have this out to the end of August just as a hedge. If we get up into the 20s, let me go to this chart right here for the VIX. I'm looking for something to kind of poke us into the 20s. We haven't really had a big vol event for the last couple of months. The last time we had that would have been here in October of last year, and then April when we had the sell-off. Other than that, it's been very quiet on the volatility front. This is one thing that's always interesting. I don't know if this was a true spike in price to the downside, but the fact that we had this thing spiking to lows again, it set up a really nice runway for a higher volatility movement. Now, we can get back to 20 pretty easily. All these previous levels where we go from, 10, 11 up to 20 plus, 10, 11 up to 20 plus. I'd like to see this kind of correction ensue on the SPY, correction ensue on the Qs. I'd like to see the VIX pop up here towards the 20s. And then I'll probably start opening up positions, selling more premium, having those volatility plays where you can go out farther, collect more premium, and really, increasing your exposure with high volatility tends to actually pay very, very well. And if prices are down enough, I'm certainly going to be interested in buying some dips on certain instruments and stocks. So the dollar had a pretty interesting week. I take that back. The dollar's still right in a range that's tough to figure out. We're going to look to see how the futures market prices in Biden backing out of the presidential election. I'll be watching that for tomorrow. This week is going to be all about earnings. So we're sitting here with support on the DXY 103.90 to 104.00 support. I still think the dollar's range bound in between 104 and 105.50. You can see my numbers there: 105.60, 103.90. If you want to be really particular. Oil, the issue of potential slowdown with global demand is probably not a good sign for oil. I'm still bullish on this with stop losses below 72.50. I'm hoping this is a push pullback stabilizing around 77.50 or so, and then oil pops back up to the upside. Gold poked all-time highs, but had a pretty quick retreat on Thursday, Friday. Silver, same type of thing. We're still sitting in some sideways motion. I'm still long on silver. This is probably one of my favorite trades as far as metals go. I'm not touching copper. Copper's been dropping a ton. Bitcoin, some good exposure. I dollar costed average into BITO to IBIT, some good exposure on Bitcoin overall. We've had a nice little rip where the bulls have stepped right back up, and I'm pretty happy with the call here. I said we're likely going to have a bear trap. So we come back in here, we test this level at 56,000. We did exactly that, and we rip back up to the upside. That low to high so far has gone up around 27%. It's nice to see a nice recovery like that for Bitcoin. Now, the next stop is, can we get to all-time highs? Gold will be interesting if the dollar gets weaker. How does the dollar get weaker? Probably cutting rates. If the Fed's going to cut rates aggressively, and they're on this course starting in September, going into the end of the election or into the election season, and going into next year where we have possibly another 100 to 150 basis points of cuts, the dollar likely is going to get weaker. Now, the ECB is going to cut alongside the dollar. That begs the question, what about the Japanese yen? Well, if the Japanese yen stays firm at 0 to 0.1%, but they're still considered risk-off currency, all this carry trade, deleveraging, unwinding might start to show up in the Forex market. So I'm watching the yen very closely. I have long positions on the FXY, which is an ETF that trades the Japanese yen. I'm long in this thing. I'm long at $60 because of break even. I put in a debit spread for a 58 by 50 just in case, and I did this out to next year. So I'm hedged on the FXY to the downside, which means I'm hedged on the Japanese yen if it gets weaker. But in the event that we see a deleveraging or a risk-off event or a vol event, then the Japanese yen stands to gain and rebalance very, very quickly with a ton of volatility in Forex. And so even if this instrument for me allows me to jump up from 58 to 72, I'm looking at like a 20+% upside here. And with options, I can probably double or triple that gain. So anyway, that's my exposure. Nothing crazy. I'm going out to like 2026. I'm going to say, look, for now until the end of 2025, we'll probably have an event in the bond market. We'll probably have an event in the currency market. I think the Japanese yen at 30+ year lows is a great spot to be parked for some type of volatility event or deleveraging. We've got some other Bitcoin ETFs and Ethereum. I did find one that was an interesting play here. This is a trust ETF on Ethereum that I could actually take some options on. So, we don't technically have Ethereum ETFs that are approved yet, but this is one that I'm trading with ProShares. I'm doing the same thing on BITO with Bitcoin. I just have some really nice credit spreads in here that are, nothing crazy, like half 1%, 1%, but I'm staggering out some expirations to see if Ethereum heads back up towards the highs around 4,000 or heads back up to 4,800 all-time highs, then this staggered out for maybe 3 to 6 months of expirations will probably generate 2 to 3% for my portfolio. Bitcoin, same thing with the ETF exposure. Copper's down. The Nikkei, this is Japan. We've been down off these highs pretty aggressively. If I look at this, there's still a potential buy the dip on the Nikkei. But I would say what makes this a little concerning would be if we see an aggressive sell-off in the Nikkei and all of a sudden we go sideways. I mean, congratulations for a 15-year recovery and a 34-year drawdown that now has been eclipsed. But if we put in a topping pattern on the Japanese yen, or I should say rather the Nikkei 225, that is how I'm going to see that Japanese yen play out. So I'm watching that closely. Europe hasn't made new highs. The UK hasn't made new highs. China's not making new highs. Mag 7's been rotated out of. I've got just a couple more things to talk about. So this is your rotation of the last week. You see that some of the biggest companies in the world, your Mag 7, your hallmarks, your storied companies, everything that's been carrying us this entire time is red, while everything else is flashing green. Now, is that the time to be, crazy bullish? Almost, because what we need to see these companies do is they need to stabilize. We can't have all these companies go red at the market caps that they're at and expect to see the SPY go higher and the Qs go higher. There's no way. These companies are too important and they're too big. They need to stabilize and they need to show probably some recovery while the broader market is potentially rotating into something that's undervalued and underperforming to see if it catches up. So I like the fact that the Russells started to emerge and started to wake up and go from this, dormant, sideways, choppy small cap into something that's now outperforming its counterparts. But I still think that after some pullbacks here, these large cap stocks still need to have some inflows, still need to show some signs of recovery. And the nice thing is they're sitting at all-time highs. So they're just pulling back off those all-time highs. To me, the trend is your friend. If we pull back to some decent support levels, I'm still looking to see if we can have a broad market rally. So for right now, all eyes are focused on earnings season. One more thing to note this week, before I pass it back to Brandon, we have 502 stocks reporting this week. This is the first big week in earnings. Now, at first, I was going through and picking out individual stocks like, okay, this one's notable, this one's notable. The whole week is notable. Right now, this is like 20 stocks, but for me, I'll probably take some stabs at the Spotify's. I'll take a stab at probably Google. Tesla for sure with high volatility expected. Cost-effective ways to trade these with options. CMG, there was a split that was a 50-for-1 split with Chipotle, which was it 50 to 1 or 20 to 1? I think it was 50 to 1 because it was a $2,000 stock. So I think they did a 51 split. I can confirm that. Ford, I'd like to see a pop to the upside because I want to get out of that stock altogether. American Airlines, Southwest Airlines, Royal Caribbean, that'll be another kind of test to see how the consumer's doing. Boston Beer, that had a good run through COVID, but it's been beat up ever since. 3M is a good one in the longer term for defensive. Colgate Palmolive for defensive. But I'd say all eyes are going to be on your Mag 7, so your Google and your Tesla this week on Tuesday. But 502 is a lot to kick off earnings season. And like I said, the earnings valuations are frothy. The expectations are high. But if these companies deliver, this is enough to say, okay, now the companies are earning it. Now the companies are proving it. We still have the Fed looking to cut. So all these things could still very quickly fuel a rotation and a broader market rally. And like I said, I still think right now, even with Biden dropping out of the race, it doesn't really change much. It's probably still in fact, I'm going to look for next week's Core 4. I'm going to look to see if I can have some better information on, kind of who's tracking the election, what probabilities say what. But like I said, it's still a popular vote versus electoral college, and they don't have to say the same thing. So that's down the road. Let's see what happens this week. I still expect a pullback to ensue. I'm looking for the VIX to go up and tap 20, so maybe another couple of days of selling would be fine. And then I'm going to watch and see how things diverge. So that's it for me, Brandon.
Hey, that's excellent. Can you jump back over to the? I was just taking some notes here. Can you jump back over to Bitcoin for me?
Bitcoin, yep, right here.
So when we look at this, we really see that those highs. I mean, we got lots of peaks there, and it's approaching that peak.
Yeah.
And so where would you say that, hey, we're headed to? How would you judge it to say we're headed to new highs? What would you be looking for? Would you put a line across those peaks, let it go above it, let it touch that bottom, and then go up? Or what does that look like for you?
Yep, there's two ways I'm going to play this. So we had this first kind of recovery and impulse move by the bulls. If this pauses right here, I'm looking for that to be a bit of a bull flag. And if that plays out, then we're looking to poke those highs again. Now, 73 and change, 74K, that's still resistance. But this is one potential setup. We just have a pause and a pullback, but that dip is bought. So if you have a higher low forming, I like that idea for buy the dip. Obviously, if we came back down to the 56, 57K mark, I'm going to buy again in case it's a range. But the next trade for me would be if and when we break all-time highs and this thing pauses or it goes, this thing's a rip, and I'm looking for 100K. So that's the hard part with Bitcoin is just like we saw here when this thing was ready to rip, it doesn't pull back. It's aggressive. So this is why, I'm sure most people out there that have been in the crypto game at all, maybe for the last 5, 6, 7 years, maybe for the last 6 to 12 months, I don't know. But the point is, if you're watching this instrument, yes, it's volatile, but speculation wise, if we get to 100 grand, that's a play against the dollar. Gold could be up. Bitcoin could be up. Bitcoin's also risk on. And it's also a tech play. So if we get to 100 grand, I'm curious what profit taking looks like. I will just look at the daily, the weekly, the monthly. If we hit overbought conditions, if we hit divergence, I'll probably start going to cash. I don't need to sit here and be a hero and say this thing's going to $1 million. Look, right. I'm going to trade it like I've traded it for the last 8 years. If it hits overbought conditions with divergence, I'm going to take my profits. I'm going to put it back to cash, maintain a core position that I can build back up. I had 10x profits before. I had 10x profits again. I'm up 5x right now. If it gets to that same like 8, 9, 10x, I'm okay taking profit. 10x profits are ridiculous. There's very few instruments you can buy that have that type of stuff. So for me as a trader, as an investor, I'll take the money, I'll protect it, I'll build a core position. I like this 1, 2, 3% exposure for my overall portfolio because historically for the last 12 years now, for Bitcoin to have 1% exposure in someone's portfolio, it has helped them double the S&P's return.
Wow.
The S&P return since 1957 has done about 9.26%. If you had 1% exposure in Bitcoin, 1% only of your portfolio, it's helping you generate almost 18%. Beautiful. Just annualized. So that alone is like, if you're looking for alpha, Bitcoin's been an easy way to do it. And look, if I lose 1%, I can make up 1%. So if and every day and every week and every month, every quarter that Bitcoin's not at zero and Ethereum's not at zero, it just fuels this narrative that's kind of self-fulfilling, where maybe it is this great asset, maybe it is this thing that's going to stand the test of time, maybe it is going to get all this love. But it seems like now that it's more widely adopted, it's finding its way into institutions. Your household brokers are now allowing their high net worth individuals or their clients and portfolio managers to add exposure to it, just as simple as buying a stock. That's pretty good. I mean, my gosh, if you're going to add Nvidia with a triple leveraged ETF, you got to be able to buy Bitcoin, for a similar price. It's insane what people can get away with. Which, like, triple leverage Nvidia is going to end very poorly for most people.
So I'm going to ask both of you guys this: do you see Ethereum getting to 30,000?
I think the first milestone's 4,800, dude. We got to break all time highs, and then from there, it's like, okay, let's see if we can get to 8, 9. Like, let's double, right? We get to 4,800. Can we go to 96?
So you see 4,800 as
that's the all-time high. And so that's a catch-up trade where it's like Bitcoin, if we crack 74, we're making all-time highs, maybe on a run to 100K. But if Ethereum follows suit and we break 4,800, we get to 7, 8, 9. If we double, it's like, again, how many assets out there are looking promising for like 100% upside? Not very many.
So I have a kind of a different view on the crypto space in as a whole. I look for more of the utility side of things, and what is Ethereum used for? It is used as what we use the internet for, right? It piggybacks other cryptos off of it. Many things are built off of the Ethereum space. Then I also take a deep dive and go into who owns what and where is it founded. That's always been my thing. That's why I've been in and out of crypto for a number of years, and why what means what. And I've shared research that I've done with you specifically. But Ethereum is owned and operated by the Russian government. It is a Russian-owned crypto. They have a backdoor into everything that's built off of the platform. So could it get to 30,000? Yes, but could it get to a point where people don't trust the Russian government again, anymore, and say, hey, you can't trade that in our country? Yes, just like we saw with MetaQuotes, and look what happened overnight. Right? There's a lot of things so it wouldn't shock me either way, but I agree. I think that because there's a lot of utility to Ethereum, I 100% think that 4,800 to 5,000, I always like to go a little bit above those all-time highs because I like even round numbers. Let's be real. But 4,800 is the first mark, right? We get there, it can keep going, just like Bitcoin, right? Nobody thought that Bitcoin would get to. I mean, there were people that were hopeful that it would get to the point it is now, and there were people that were anti it was going to get there.
Yeah.
So
I think people that are in crypto are a little bit more realistic than people that are in GameStop.
Yeah.
Yeah.
I mean, I cannot tell you how many freaking idiots are on GameStop like, Roaring Kitty's doing this, and this is like, it's a freaking pump and dump. You idiots, like, stop trying to play GameStop. Like, there's other stuff to invest in that's so much more consistent and so much more liquid. Like, you idiots, just stop following this crap.
On the election front, so I love election season. I love politics, but you can't talk politics with everybody because some people don't have the sense that God gave a goose. So and that there'll be people just get angry. But I will tell you that preliminary polls that Kamala Harris versus Donald Trump ticket, Trump wins by 54%, and Kamala is at somewhere in the 41% range with a plus or minus of 8%. So, that could flip either way, but I think it could be, it all depends on how she performs in a debate, and can she show the leadership qualities and debating ability that have some of her sound bites haven't been the best. And unfortunately we live in a viral world, and that's just the thing of it all. And Trump has his own social media that he can
just be high road. Just take the high road. I mean, honestly, it's like it can be so ugly, but it's like if she just can, whoever it is, but just come off truthful and intelligent, and just look. There's so many glaringly obvious things that people want to have addressed. It's economy, it's jobs, it's inflation. If you stick with that narrative and you have a plan of attack for those things, I don't think the platform has to be that much more difficult. It's like, I mean, look. Nobody feels all-time highs right now, because if you can't afford to get in a house because of 7% interest rates, if you can't afford to refinance for a business, if you can't afford to buy a car at 8-9% interest rates, that's the real stuff that people are dealing with. It feels like the economy is worse and things are out of reach for a lot of people. It's affecting like the bottom. I mean, we talk about the bottom half, but it's like it's 90% of the economy that feels this because it's the 1% and the 10% that have all the wealth anyway and have all the assets. So, I mean, of American households, only about 63% are invested in the stock market. And so that's a good chunk to celebrate all-time highs, but nobody knows how to do it, right? Financial advisors just like pat themselves on the back of like, look at this, we're invested and you're making all-time highs. I mean, it's not enough. It's like people don't feel it, and when you're dealing with higher gas prices, sticky inflation, and I mean $20 value meals at McDonald's, it's like that stuff bothers people. And it doesn't feel like it's better for the last 4 years because this is everyday life that we have to address and deal with. So I don't think it's hard. Economy, jobs, inflation, have a plan of attack. Things are going to get better. Here's how. And just don't lie.
Yep. And the problem is that, and this is actually leads me right into economics, is that if you look at inflation, it's not, people focus on the most recent number, but it's not the most recent number. It's the sum of all the previous numbers. Yep. Inflation is actually up 20%. Yes. From 2020 to today. It is up 20% from where we were in 2019 to where we are today. Unemployment has gone not down. It's now back up to 4.1%. And by estimates, it could be at 4.2 to 4.3% by the end of next month.
All right, but pause right there. So now bring in AI. And does unemployment go up over the years?
Yep.
Yes. So here's the thing about AI, and I want people to truly, truly hear this. AI will cause more unemployment, right? All of Tesla has, Elon Musk has committed that once they figure out the robots to be able to replace the humans, they're just going to go with the robots.
Yep.
But what does technology do, right? The internet caused a lot of things to change. Robotics caused a lot of unemployment, but it creates new jobs and new opportunities as well. So, are we going to go to this universal basic income world and who knows, right? Hopefully that's long into the future, and YouTube doesn't even exist by then, right? Yeah. But the thing that I would say is that yes, AI is going to cause more unemployment, absolutely 100%, especially as software is able to reach out and be smarter and develop and mimic human conversation and mimic banking and things like that. And so there is opportunity for AI to continue to lay off employees. But another thing that's going to happen is eventually corporate profits, there will need to be further development. Right. What you have right now, what Chris is showing is beautiful, is something I've been talking about for a long time, in that these 7 companies that have kept all of this top talent and this top level talent to program and build technology. Well, these people are leaving are being let go from these companies, but they are finding jobs. Otherwise, unemployment would look like, probably 8-9%.
Yeah.
Because the reason why they're finding jobs is companies like Rocket Mortgage and Ford have been so far behind the technology curve because they couldn't get access to people at Google, Apple, Amazon, all that. So now they can, especially with what goes into effect in September on September 4th, which the CFTC, as you know, earlier this year got rid of non-competes, but that goes 4 months from the date it was in the books, which will be September 4th of this year. So there's a lot of different factors that will impact will impact unemployment over the next little bit. And AI is going to create problems that somebody else is going to have to be smart enough to solve.
And on that note, James, too, like the margins will improve, but I almost wonder, like, all these very smart people are going to go into startups and private equity, not necessarily going public. The expectations to have a publicly traded company in the S&P 500, your quarterly requirements are painstaking. Like the amount of transparency you have to have, and not that private equity is not transparent, but it's really not. Like the mark to market is not real in private equity. If somebody's willing to pay 100% premium on something private equity, they will, and it could be worth garbage. And so that's potentially this bubble this could be a bubble that we don't really acknowledge. But if somebody's willing to pay for it, it just gets passed on. Like it's going to be interesting how private equity plays out. But my point is, there will be companies that never have a $2-3 trillion market cap. But what they'll do is they'll probably earn, 10, 20, 30 billion. and be small caps, and they'll be privately held, never go public, but be very successful.
Mhm.
And that's going to be interesting to see, like, how do investors play into that outside of, you gotta know somebody, you gotta be in the network, you gotta be in this, it's that's the sad part, is if opportunities like that are taken out of people's hands as an investor, as like a publicly traded company, there's the difference. But is Apple going to be unsuccessful? Probably not. Is Google, Amazon, Microsoft going to be unsuccessful? Probably not. Tesla, I mean, James, you said this. Tesla's determined to be one of the most profitable companies in the world, and they'll do it because they'll have 0 employees. It'll be AI, and it'll be in SpaceX, and it'll be a combination of energy plays as well as cars and all. It's like they're a huge disruptor that has just taken the auto industry by storm, but let alone
Yeah.
growing into the energy space. Tesla could be massive. And so that's where the the fluctuations, the ups and downs. I mean, it was one of the most hated companies earlier this year, and it's surged, in 2 weeks time went up 45%. So it's getting some love out there. It's just crazy how emotional these markets can be with swings in companies, that it's like, we love you, we hate you. We love you, we hate you. And it just depends on how much volatility an investor is willing to deal with.
Where,
But
where's Tesla now?
Tesla right now is, I want to say it's in the 250 market. It really hasn't gone
239.20.
239. Okay.
Yeah, earlier this week on July 15th, I'll say this. I because I have this access to a very specialized software, but it's Tesla was up $10 just from Elon Musk endorsing Trump.
Yeah.
Oh, yeah.
After the assassination. But another thing that did occur this week, and if we want to get into it, I can start sharing my screen.
Chris, we'll talk to you later, buddy.
All right.
Let me slide. So, share screen and entire this one. All right, perfect. So the first thing, getting into Tesla a little bit, and just the mindset of Elon Musk. He's moving Tesla's headquarters has already moved to Texas. SpaceX is going to be in Texas now, and so is X.com, or Twitter as we know it. All of those are moving to Texas, mainly because of Gavin Newsom, which is again something why I don't know if he will, if Gavin Newsom will pose as big a threat as everybody may think, as far as politically against someone like Donald Trump. Now we're going to start high level and go into a little bit smaller in individual stocks. But we're going to start high level with two big things. One thing that came out last week that I want to talk about is China reels from banking crisis. There have been 40 banks that have literally failed in China over the past few months. And that is part of it is mismanagement of funds. Part of it is part of this commercial real estate bubble that they built themselves, and they are just letting collapse. This is why there's been so much crazy things happen economically for China. That plus moving manufacturing out of China, because labor rates have gotten so expensive in China that they are no longer the greatest manufacturer that they were, right? They used to be the country known for extremely cheap manufacturing. Still are to an extent in some areas, but Vietnam, Cambodia, Laos, Chile, India, Bangladesh, even Canada and Mexico are all competing with them as far as labor prices. And then you add in the fact of onshoring those goods, the cost of onshoring, meaning shipping from China to the US. There is a significant discount when you have it coming from Mexico, or when you have the manufacturing happening in the U.S. between Foxconn as well as Taiwan Semiconductor coming to the U.S. and opening soon. Interesting thing about Foxconn, though, one of their car manufacturing companies that just recently filed bankruptcy, which is Fisker. I happen to like the Fisker Ocean. I thought it was a good-looking vehicle, great SUV, under $30,000, et cetera, et cetera, et cetera. Met all these things, but just this year has just caused the company to collapse. It couldn't service its debt with the higher interest rates, and that is what leads us into this major week. So this week we have some significant fundamental news announcements, kind of all capping off with one big announcement as well. We have existing home sales coming out. This should be another fall. We have that is on Tuesday. Monday, nothing really major, but Tuesday we have existing home sales happening for the U.S. And then we get into money supply. This is something that I look at constantly. This is actually, and maybe one day we'll go really in depth and talk about this, but a hyper increase in money supply in 2004 to 2007 helped cause the chaos that happened in 2008. As you see here, this is what you call quantitative tightening, which is deleting money out of the system, which we've done. We've gone from 21 billion down to 20 billion or so. So gotten rid of $1 billion in the economy. But right now, they still need that money supply to continue on. But we'll get into that another day. We have mortgage rates coming out as well as mortgage applications. As you can see, we've had some down months, but we've had some decent months since mortgage rates have been as high as they have been. And then getting into new home sales. Now, month over month, new home sales last month down 11.3%. Year over year, home sales have been down 7.7%, 2 straight years in a row. That is a big thing. That's a 14% drop in home sales. Obviously, the Midwest, California, and New York are the most affected of those home sales, which gives some opportunity, but also that creates a tougher market to enter in here in states like Florida and Texas and Arizona. I can tell you anecdotally, there's parts of the city where homes that were $100,000 to $200,000 because people did not want to live there, those same homes now are selling for $700,000-$800,000 because people can't find a place to live in Florida. Another, we have GDP coming out. They are expecting 2%, forecasted to 2.5%. I'm just going to go out and tell you guys right now that's more than likely not going to happen. We are not going to see a 2% growth rate quarter over quarter, and especially when net exports has gone down, government spending has remained flat. Foreign direct investment is remaining flat, and consumption is way down. We're just not going to see that happen. Jobless claims continue. We should see that should be interesting to see. Then if we get down into Friday, we have one of the measure of inflation that the Federal Reserve uses to discern whether prices are increasing or decreasing. As you see, May came in at 2.6% from 2.7, 2.7, down as low as 2.5 in January and February, but that's way better than what we saw mid-year last year, at 3.3%. Now, in looking at this, the forecast is for 2.5%, which would be that decrease that would be great to see, personally, great to see. But who knows? Then lastly, the last couple of things I want to go into are more on individual stock basis. The first one, I'm going to talk about a small stock, and then we can go from there. This is an ADR, which stands for American Deposit Receipt, which is an international company. Immutep, they just announced that they had a successful meeting for their plans on phase 3 clinical trials for non-small cell lung cancer treatment. It'll be very interesting to see. Usually these cause great spikes up. This was a company that was similar to Immutep, but did something different, was Intuitive Surgical. They created the Da Vinci machine, as well as how major surgeries are operated today. But what I look at this is, and I say, look, it's a $2 stock. If the phase 3 clinical trials go through, great. They're probably going to get bought by one of the bigger companies. That's just what happens. But going through some of the earnings reports, you have Walmart beating earnings. You have stocks. This is interesting. ARM, right? The AI company. Morgan Stanley upgraded it to overweight. So saying that it is overvalued right now. But this is what I wanted to call out. a lot of early revenue misses. This is what is going to potentially cause that, potential correction in the market, if you will, right? You have Scholastic missing, Selective Insurance missing, CrowdStrike. Obviously, that is down because 11% this week because of what happened on Wednesday and Thursday with them and Microsoft and the update that was pushed out. You had Travelers miss, Autoliv miss, and then Green Dot, they were just fined by the FTC. Halliburton, another big miss as well. And then American Express, they beat earnings, but dropped 2.7% because they have low growth forecasted and smaller service fees because people just don't have the ability to purchase like they have in the past. And they are more conscious about purchasing on credit cards, even though debt is at an all-time high, mainly because the number of people of 18 and older are at an all-time high. So a lot of interesting things going on in the world.
Well, I think one of the biggest things is how does the community really understand how to use this as an investment opportunity? Just like we're not financial advisors, whatever you want to say, but at the end of the day, like even the discussion about Bitcoin and Ethereum and timing, we want to read into that. And if we really think that Bitcoin is not going to hit 100,000. I think that'd be a little irresponsible for us to say that, right? It's all of these markets have broken their all-time previous highs. So, it's a good time to buy the dips and kind of get involved. So let's keep going, baby. I love it.
One thing I just want to comment on one thing you said though, and one thing we're talking about. If there is if you're with a mutual fund, and this is not for me, this is from Vogel himself, the creator of Vanguard, right? So if you have a 401k and you're invested in something, it's more than likely a mutual fund. Now, Vanguard is one of the largest mutual fund companies in the world. And he himself said, Jack Vogel himself said, I think mutual funds are some of the worst investment ideas that people can have. Because if you have your money invested in my mutual fund, the maximum earnings you'll get out of any mutual fund is 10 to 12%. And that's like crazy high, sometimes 30%. That's even ridiculous. But if I lose all of your money because of my investments, oh well, I lose nothing and I make 70% return on your money, and you lose everything and get capped off at a 30% return. Now, right. How great is that? And see, there's ways to protect yourself, ways to invest, ways to use things like equity, fixed equity, index universal life that allows you to have a 0% floor, and allows you income growth even in downside and income protection when anytime the market falls. So again, if they want to reach out to you, they can go to my website, One Life FL, and set an appointment if you want. And we can, definitely just have the conversation. It's information at the end of the day.
It has to be had. It has to be had. All right. Great stuff.
Thank you.
Guys, we have been on here for 53 minutes, and it's been exciting for me. I'm learning a lot every day. So at the end of the day, we try to wrap this up within an hour. I want to introduce you guys to Eric really quick, and then we're going to talk a little bit about for 2 seconds, and then we're going to go. But we do yield farming here, and yield farming has been a fantastic way for you guys to, on the investment, 4 things: mindset, investments, retirement, 9 to 5. And so Eric has done a fantastic job presenting a course at $650. It's normally $3,000. You get a discount because you're with Core 4. So let me briefly introduce you to Eric. Eric, I'm sorry it took us so long, but I hope it was worth it. How are you doing? Man, your audio is not working. Not sure, but let me just tell you guys, Eric is fantastic. He's got a great course. We've been doing at least, 8% a month, 10% a month, and it's active. So it gives you a chance to control your investment opportunities. And that's a very, very, very powerful way for you guys to take control. We believe that diversification is everything, but it has to be responsible. So we also have, and I deploy personally, I deploy bots. So we have the Core Forex bot. And so that bot is a fantastic bot for you guys to use, and you will eventually be able to see it on FX Blue, and you'll be able to see it on my FX book just to see how that is working. In addition to that, we have the Coinbase Trader. So, I've been in there since May. You guys are always welcome. I hear from you guys all the time. Hey, how are you doing with Coinbase Trader? Let me see it, blah, blah, blah. So you guys can, get a chance to look and see exactly how that's been working. And if you look in the description, you'll be able to see the link, and you'll be able to get your white glove service from that. And that's $34.99, not $34.99, $3,499. And so the deal is that it buys the dips and then it sells. It has its targets. But what's great is you get to choose in your Coinbase account which coins you're going to work with, and you also get to manipulate that. So whatever the profit is, and it's very user friendly, and it's been fantastic. The next is Kong. Kong has been, incredible. Hasn't lost a dime. It's still in this ramp up phase for my account. I've been in there. This will be my 4th week. And so you'll be able to see that on FX Blue. And if that's something that you want, you will be able to get a discount. It's $12,000 to be able to get the bot. But, the bot has put forth in the last 500 days almost 1,200%. It's had aggressive all the way to conservative. And we will have on our show the representatives that actually can talk about it, so we can introduce this as something that's a part of our journey. And then finally, we want to talk to you so we can close out the show. We've been doing a case study with Miracle Cash and more, and so it's been successful for people. But at the end of the day, we've told everybody that, it's paid out on its commissions. It's still working through. It is a company. And just like Chris and James were talking about earlier, the whole idea is that if you're not in early or in the private conversations, it's a little bit tougher for you to take advantage of the opportunities that are out here. And so this is one that you guys can take that opportunity, take advantage of it. So, and we just have to see what happens. So anyway, that's our show. I wanted to give you guys the updates for everything. It's been fantastic. I don't want to ever take more than an hour's worth of your time unless I've already previously told you or asked for it. So have a great night, and I look forward to seeing you guys very, very soon. Thank you.